Good morning, everyone. All right. Well, the CPI numbers came out, and thing that I advised the last few days, not that I did it too aggressively myself, but I did mention it would have been wise in the last few days to take some profits, get some hedge, or sell some covered calls ahead of this print. The market obviously was in indecision mode, and it was choppy for about 7 to 10 days here waiting for this print, and it came in worse than expected. 8.6 is a headline number year over year versus 8.3 expectations. The core was 6% year over year versus 5.9 expectations. So, I obviously I don't love it. I've been bearish still on the generals and the big caps. I've been trying to pick bottoms on other stocks that I think may have bottomed. But let's look at the major indices and the big caps to see what may be coming next. First of all, QQQ has dropped below the 20 DMA. Now, I cannot predict what's going to happen today, especially on a Friday. I don't know if this is one of the big OPEXs, but there is an OPEX Friday. There's a lot of technical factors that go into movements in the indices on a particular day. So who knows if it does something illogical or unexpected today? I think that's possible. I'm looking more longer term, in a kind of a swing perspective of a few weeks to a few months. And here you can see we're below the 20 DMA technically. I'll talk about the fundamentals in a second. So we're below the 20 DMA on the QQQ, and for me, that's been very reliable. Look at this. It just, these lines, it's just beautiful. Last time it dropped below the 20 DMA, it was a start of a long pullback. So I think that that's possibly in the cards here. And we'll talk about why fundamentally I think that could happen. So the same thing with SPY. SPY below the 20 DMA. So again, who knows what it does exactly today? Maybe chaotic, maybe up and down and confuse some people. But ultimately, I think we're going to have to retest these lows on both SPY and QQQ. Uh, does it go lower from there? I don't know. One of the things that comes in at this point is to what extent is all this factored in? Because the market is forward looking by 6 months plus. Now, I don't think it's factored in because we haven't seen the big fall in the generals, especially Apple. Apple is up here still enjoying many of its COVID gains, way, way above the pre-COVID highs. And I don't see this. I don't think this should be any different than any other stock that has lost all of its COVID gains. I've talked about this forever, and I think it's going to happen. I think and from consumer spending being down, and I think the profit margins are going to be impacted because of inflation. So I think at some point Apple is going to warn, or the street's going to get it, and this will keep going down, and that'll bring down the SPY and the Q. That's been my prediction for a long time, and I'm sticking with that. Now look at this. There was some earnings that came out of DocuSign, which could make this exacerbate this situation a little bit with the major indices. DocuSign down 25%. They missed earnings, and it's already been down so much. So I want to bring this up for two reasons. One, to illustrate that a growth stock that's already down to their pre-COVID highs and down 80, 90% can still go lower. All right. That's the one thing I want to mention. And not only did it already still go lower, 24%, but if you do the math on this fundamentally with a revised EPS, if you take their adjusted earnings and just annualize that, if you want to do that, and who knows, it may even get worse. But if you just annualize that, slap a 20 PE on it, you're talking about like a $32 stock price, right? And here we're at 66 after a 23% drop. So I illustrate this again for what can ARK and risk asset stocks still go lower? And I guess the answer is yes. We're below the 20 DMA here. Man, I'd love to see it hold 35, I'm not sure that's going to happen. I'd love to see that though, but it may not happen. Now, the other reason I bring up DocuSign in relation to what can happen with the NASDAQ and the SPY, again, not necessarily today, but over the next few weeks or a few months, is this is not a consumer discretionary product. This is about business productivity, DocuSign. This is supposed to be a little more recession resistant, or at least react a little bit later in the recession. First, you see the consumer demand fall off, and then maybe businesses will pull back. So I don't know the exact reason. I haven't read this PR, or I just see the headlines here. but it's worth it to go through this to see the reason why. Is this company specific or not, right? If it's not a company specific issue, if there's lessening demand for productivity items, now that could spell trouble for stocks like Microsoft and Zoom, right? Microsoft below the 20 DMA here, by the way, which again, a stock that should be more recession resistant than an Apple. And Microsoft has a huge role, $2 trillion in the QQQ, and I don't know if they're in the SPY, but definitely the QQQ, obviously. And then Zoom, which I had hoped had bottom up big, it's big from their bottom. Man, what is that, like 35-40% off from their bottom, because it is a pretty low PE, and their last earnings report did not show a slowdown yet. But if DocuSign is slowing down, maybe Zoom is going to slow down at some point too. One of the dynamics that happens is, I have another business. It's a dating site, and I remember going through a 2008 crash that we lost like 10% of our business overnight, and it's happened on a couple occasions where we lost. The COVID crash too. We lost like 10% of our business overnight, and that 10% represented the people who are not really actively using our service, right? They're an automatic renewal, and then macro situations getting tough. So they're looking at their bills and they're seeing what can they cancel that they're not using. So that's something to keep in mind with these recurring subscription businesses where, even if you think from a macro perspective, hey, these businesses shouldn't slow down. Microsoft, people using Word, etc., shouldn't slow down, but you always have a certain percentage of users. In my experience, for my dating site, it was 10%. I don't know what it is for other businesses, but let's say, for example, maybe 10% of people have a subscription to Microsoft and they never use it, right? They bought it like 10 years ago and it's on auto renew, but they're no longer working on Excel or Microsoft or Word or anything like that, or cloud services or whatever it may be. And that's a possible area where you can see a possible reason why you could see a company like DocuSign and perhaps Zoom and Microsoft also being hit at some point. So that's a potential. I'd like to dig into the DocuSign further to see what the reason for that was, but it could exacerbate that thesis I've been having about Apple being the cause for the major indices to make a big leg lower again over the next couple quarters. Maybe throw in Microsoft in there too, and that could spell trouble for the bigger indices. Now, we've been stock picking. We've been looking for stocks that can buck the market trend, and we've been pretty successful at that. But, if the indices wash out, if they go down another 20% over the next couple months or couple quarters, sometimes it's something to be cognizant of. So, I'm not going to advise what anyone should do with their portfolios today. I will be looking at my portfolio. I take these moving averages seriously. I'm not, and again, I could be wrong, but my experience has shown me these moving averages work. And when you break below or above one of these 20, 50, 200s, it's the beginning of a trend, right? So, maybe there's an opportunity here for me to raise some capital and change some allocations today. So I'll be looking at my portfolio to see if that should be done. All right. So that being said, that's really the most important thing. Everything's moving on the macro today for the most part. There's a couple stocks I want to point out, though, as possibilities. I threw out BTU here because, I don't know, on my car ride over, I was listening to details of the report, the CPI report, and one of the panelists had mentioned electricity inflation was really high, the highest it's been in like 40 years or something like that. And they pointed out one of the reasons is like a shortage of coal. So I immediately thought of BTU, which was provided to our community to be on a watch list by Polo. So a negative reaction so far here. Baby out with the bathwater. Obviously, it's very well 19,000. But could this potentially be a stock that bucks the market trend today? And on that note, I want to bring up the top FANGs. That falls under a FANG stock: fuels, agriculture, aerospace, nuclear, gold, and minerals. And look at that. Also, at this point, there's such a liquidation right now, at least in pre-market. Even the new FANGs are being sold off. People want to raise money at this point. But this is something to consider because let me just pull up QQQ. In these cycles where NASDAQ and SPY have been going down, there's been oftentimes an inverse relationship, both in this time period here and another one over here, where those new FANG stocks did well, right? So potentially you can find a stock here. See, corn just ticked up that could perhaps act as a hedge if we're expecting another bear period. So no guarantees, but that's something to look at. So I go back to my main watch list. So that's why I threw BTUU up there to watch. MOGO, I have a small position and waiting for a catalyst by the end of this month. But man, I got to tell you, this is a 20 DMA. So this is key resistance right here. Okay. Um, I don't know. This could not work out possibly, but we're waiting for the news of the beta launch. When it launches, I'm out. 150 to 175, maybe something like that. Um, it's in beta now when the product is actually production launch was expected to be this month. But this is a risk asset, and and ARK is your guide on risk assets. It's down 4%. Let's see what happens if ARK breaks down below 35. I'm afraid it's going to take down all our risk assets. Every stock we've been talking about basically considered a risk asset at this point, even SMSI and SEAC and DRIO and everything, right? So hopefully at 35 level will hold in ARKK to help us maintain these good stock appreciation prices we've had with DRIO, for example. SMSI, let me just point this out. The target was a 50 DMA here. I'm hoping there's going to be a little bit of a technical continuation. I don't know. I have some. Maybe I'll sell some covered calls on SMSI today. I'm not sure it's going to break 50 DMA if the market's going to be going down. So that's something to look at. Yeah, I probably will be looking to selling covered calls. PTE, man, we almost had spectacular timing on this. We had the conversation in the rooms, and Matt Kolb guided us on exactly when to buy this, and he was exactly correct. To buy it after the offering, it would have been I don't know, around 215, 220. Like, it was perfect timing. We discussed it, and I was in it for like 5 seconds, exaggerating, but I didn't have patience. I needed my money for something else. I was in it for like a day or something, and I missed this big move. So he was right about that. I don't know if it's still time at 270 to do it, but it's over the 20 DMA, and now they have a balance sheet. They have money. They're funded to be able to do what they need to do next, find a partner, whatever. So Matt is pretty bullish on this, and there was a big move last night. I don't know if there's some rumor or something going on, but that's something to potentially watch. I should have had more patience. That was perfect timing when we brought it to the community last week to start looking at. I got to tell you, SEAC has disappointed me yesterday, and I'm not sure why. Maybe people aren't interpreting. Maybe I'm a little bit ahead of the curve, in terms of in Kavanaugh on Instagram combined with the earnings report. Maybe there's something I'm missing, or maybe it's just the market, and it's just simply the market discounting the possibility this deal gets done. But I talked about the risk reward on SEAC to have like 45 cents in cash, no debt, right? And you're paying less than one time EV to revenue for the rest of the company, a company that they're guiding for better than break even this year. But, given the macro, who knows if that guidance will come true. So that's the downside if the merger doesn't happen. And if the merger happens on the agreed to terms, this probably jumps to like 150 or so at least. So I took my position. It seems like a compelling risk reward. I always like to see quicker reactions, obviously. I'm a big believer, those of you who follow me, of efficient markets. And when the information changes, there's a delta in information. I expect that to re-rate stocks quickly. It did in the morning, and then it sold off. So a little disappointed about this yesterday. And there must be a thesis from my perspective, the way I look at the stock market. There must be a thesis or a reason why people are not buying into the thesis I gave yesterday. It could simply be I'm a little bit early and it takes time to percolate. So we'll see. But, I don't have plans on reducing this position at this point. I took a big position yesterday, and we're going to see what happens. VTSI had a little bit of news yesterday. I said this morning, I'm sorry, that they got an extension from NASDAQ. I don't think that's going to cause a pop in the stock. Maybe we'll stop further bleeding. I mean, volume's been dead, so I still hold this, and we're just waiting. So they got 2 more months to finish the audit and get their paperwork in. I did start a position yesterday, or added a trading position. I already have CFVI, but I added a trading position yesterday, and honestly, it was a combination of, we're down here at the low tens, right? Which basically 10 is your bottom. So I'm kind of looking at this just from a risk reward perspective, right? So how much lower can it go? Not much before the deal is consummated, right? Still in the pre-spec, pre-closing stage. Combined with a couple catalysts, one catalyst and one potential catalyst, that I thought it could be a good time to add some extra trading shares and potentially sell in a pop. Those 2 catalysts were Ice Cube did something with Rumble like yesterday. I don't even know the details, but I saw there was a headline on it, and I went to Ice Cube's account and I saw he tweeted out a Rumble link, and I noticed he had like many millions of followers. So I'm like, all right, that's cool. That'll help get record continue with their trend of record numbers. The other thing I was looking at is, it's early June, and they often will give you a report on traffic numbers from the previous month, May, and they're typically like a record every month. So perhaps there's going to be an announcement soon. So here I'm looking at, low tens. Maybe we get an announcement. Ice Cube could be a catalyst. Maybe I can sell this on a pop to 10.50 to 11, something like that. So that's why I took a position in CFVI yesterday, trading position. All right. And that's about it. I did sell all my ribbit. That ended up being the right move. For now, I'd sold all my ribbit. I told you about that because of the event. I anticipated that would be a top in the stock right before the LD Micro presentation, and it was. Unfortunately, I put all my money from there in SEAC, but it was 75 to 80 cents I was buying SEAC at, so not terrible. I think, definitely better off with that switch so far, but we'll see how that plays out. All right, man, that's all I got. I think, I am sticking with my idea that this could, whatever happens today, there could be volatility, there could be technical moves and bounces that seem inexplicable, but I'm more of a swing trader. So I'm looking at this break below the 20 DMA and predicting that we're going to be in for a downward move over the next few weeks. So that's what I'm looking at. I'll be reviewing my portfolio and making some changes this morning. And I said previously, I'd rather, miss a little bit of it, right? I may miss the top, even though I guided people. I should have done what I guided people, right? Like take some risk off the table going into CPI. But, I had said yesterday that I was waiting for CPI, and, if it goes down, sure, you lose 2% here, like you're seeing on the NASDAQ. That's probably the start of a trend, a multi-period trend where we'll go down much more. So that's what I'm going with. So I'll be making some of my allocation changes this morning. All right, guys. Thank you very much. We'll continue collaborating in the room.